Good morning everyone. Welcome back to our accountancy online classes. In this class we have to discuss about a new transactions, new adjustments which we are not solved in previous video. Now we have to move to the new question, which is totally different from previous questions from the chapter Dissolution of Partnership Firm. First we have to read the question. What the question they are given, first we have to read. After that we have to analyze. After that we have to classify, and finally we have to move to the solution of this question. Let us come to question number 2. In my previous video we have all discussed about the question number 1, that is basically information they are given, but in this question few additional information is also available. Based on that we have to move to the solution of this question only. Here question they are given, first we have to read the question. Surya, Chandra and Akash are partners sharing profit and losses in the ratio of 3:1:1. Their balance sheet as on 31st March 2019 was as follows. So balance sheet they are given, liabilities amount, assets amount. Under liability side, first heading is capitals. Under that 3 partners they are given, Surya, Chandra, Akash. After that creditors 20,000, bills payable 4,000. Let's come to asset side. Goodwill 10,000, machinery 40,000, furniture 20,000, stock 85,000, bills receivable 16,000, debtors directly outer column value given 32,000, and cash at bank 1,000. Total balance sheet total 2,04,000. Next, further information is also available. On the above date, the firm was dissolved. How the firm is dissolved? Here the information is given. The assets realized as follows: debtors 28,000, bills receivable 14,000, goodwill 12,000, stock 1,10,000. Next, adjustment number 2. Machinery is taken over by Surya at rupees 30,000, and furniture is taken over by Chandra at rupees 24,000. Adjustment number 3. Creditors and bills payable paid in full. This is new adjustment for you people. And number 4. Dissolution expenses amounted to rupees 5,000. Though prepare realization account, partners capital account, bank account. So this is the information they are given. So for this we have to move to the solution. So before moving to the solution, we have to classify the questions, where the transactions we have to get and where we have to write the transactions, that we have to classify here. So totally here the question is given: Surya, Chandra and Akash are partners. 3 members are partners sharing profit and losses in the ratio. Here ratio is compulsorily given 3 by 5, 1 by 5, 1 by 5. 3 plus 1, 4, 4 plus 1, 5. 3 by 5, 1 by 5 and 1 by 5 is the profit sharing ratio. Their balance sheet as on 31st March 2019 was as follows. So balance sheet they are given. Liabilities amount, assets amount. So under liabilities, 3 capital versus capitals they are given. It will come to partners capitals account. Creditors and bills payable liability, these two are the liability, will come to realization account. Credit side we have to record it under step number 2. Come to assets side. All the tangible and intangible assets will come to realization account debit side, except cash at bank will come to the bank account only. All tangible assets and intangible assets we can see, we can touch, that is tangible. We can't see, just we have to imagine, that is intangible. All the assets will come to the realization account, step number 1. And the further information is given. On the above date the firm was dissolved. They are saying that the firm company is going to dissolve. So here the details they are given. The assets realized as follows. So how the assets are realized? Debtors rupees 28,000, bills receivable 14,000, goodwill 12,000 and stock 1,10,000 rupees they are given. Totally 4 assets they are going to be realized. So here how many assets we have in the balance sheet? 1, 2, 3, 4, 5, 6. Totally the company will have 6 fixed as well as the current assets are there. Out of that asset, 4 assets they are ready to sell. Remaining 2 assets they are not sold anyone. They are doing some other thing. So totally adjustment number 1, realization account. Credit side we have to record it. Again bank account. Debit side we have to record it. Totally adjustment number 1 we have to record it into 2 places. Have you got it? Next adjustment number 2 is given. Machinery. Machinery is a asset taken over by Surya. Furniture is taken over by Chandra. Out of the 2 assets, out of 3 partners, 2 partners has taken over by separately. So this will comes under step number 5, realization account. Credit side we have to record it. Partners capital account. Debit side we have to record it, because both the assets will be taken over by the partners only. They are not selling to outsiders. If they are selling, if they are realizing, means it will comes under adjustment number 1 and we will record it in the step number 3. Again it will come to the bank account. So here what will happen? They are not selling. The business partner himself taken over. So it will consider first step number 5 we have to record it under realization account, credit side. Again where we have to record it with the same value we have shown in the particular partner's capital account. Whenever they has taken the machinery means we will ready to lose or reduces their capital. We have to deduct this value from their account. So we have to debit it to the partner's capital account. So this is adjustment number 2. Let's come to the adjustment number 3. Here the information is given. Creditors and bills payable paid in full. In my previous video, in the last question number 1, we have to discuss that the liabilities when we have to repayment, he will give the discount to us. Okay, but here there is no discount. How much we are liable to pay, the entire lump sum amount we have to repay at the time of closing the company. They will be clearly mentioned that. If they are not saying clearly, then also we have to pay. If he is saying about discount, after deducting the discount, then we have to pay. But in this question, for this adjustment, he won't recognize or inform about the discount and all, we have to pay the full values of creditors and bills payable. Okay. Next, come to the last adjustment number 4. Dissolution expenses amounted rupees 5,000. Here the concept of dissolution expenses. Who will pay the dissolution expenses? Means the partners not only pay the expenses. Here the company is paying the expenses. Though totally we have to record it. This adjustment number 4 is realization account debit side and bank account credit side. Because we should consider it is a expenses to the company. The creditors will pay in full, realization account debit side, and again we have to write bank account credit side. We have to record it this one. Totally we have to prepare finally. So realization account, partners capital account, as well as the bank account. So these are the accounts we have to prepare in this concept. Okay, we have to move to the solutions related to the exactly this question only. First we will draw the columns for realization account. So first we have to draw the columns for realization account. It's very important account. Realization account is a very important account for you people. This is about the exactly columns of realization account. We have to move to the solution of the account only. So step number 1, what we say, we have to follow all the steps. If any step is not given, we should ignore. If any the remaining steps what they are given, we have to continue. Step number 1, what they will be says in the pro forma, in the format. So to realizable assets at book value, what the value which is available in the balance sheet, the same value of assets we should record it in the debit side of our realization account only. So first we have to write here, no need to write the step number 1, 2, 3, just for your clarification, just for your assumption, imagination. I will give the details about the steps later on. No need to write that one. Directly you have to move to the solution. First, 2 realizable assets. We will write here realizable assets at book value. Here how many assets are there? 6 assets they are given. So the first is goodwill they are given. The value of goodwill which is given in the balance sheet is 10,000. We will write directly to the amount column. After goodwill, machinery they are given. We will write 2 and y is common. Again, 2 machinery, 2 furniture. The value of machinery is 40,000. The value of furniture is rupees 20,000. 40,000, 20,000. After that, stock 2, bills receivable 2, debtors. So totally 6 assets they are given. We will write all the assets including cash they are given. We won't consider that one. Cash and bank will come to the bank account. So we have to write the value. So the value of stock is 85,000. The value of bills receivable is 16,000. The value of debtors is 32,000. So first we have to complete the step number 1. What they are the contents they are given. Let's come to the step number 2. Step number 2 always comes to the credit side. So So we will write by realizable liabilities at book value. This is step number 2. So here any PBT is given in the question, RBT is given in the question. If it is given means we should write here in a directly. If it is not given means no need to consider that one. After that we have to classify how many liabilities are there here. Two compulsory payment liabilities are there. One is creditors, another one is the bills payable. So we will write by creditors 20,000, by bills payable 4,000. Creditors they are given, bills payable they are given. So we should consider whether any transactions are left to record for realization account in the previous balance sheet. No one is there. So next we have to move. Let's come to we have to complete step number 1. We have to complete step number 2. We will come next step number 3. What we have to do here? By cash or bank account. So in bracket we have to mention assets realized by cash or bank account, assets realized. So here assets realized information always it is available in the adjustments. So here few assets they are realized, that means they are ready to sell. Which are those? Debtors, bills receivable, goodwill, stock. Sometimes goodwill will be not realized in the adjustment. During that time no need to consider goodwill because it is intangible assets. Why we have to close the company is due to the losses only, due to reduction of the goodwill only. During that time if they are not given in the adjustment, that is intangible assets is missing, during that time we won't consider. If it is given means we have to consider, if it is not given means no need to consider, we go directly we have to record the values. Other than goodwill, any tangible asset, that is we can see, we can touch, we can imaginable asset is there means that value we have not recorded means during that time we have to record that asset only. So here step number 1 there are 3. We will say that assets realized as follows. We will write in the inner column debtors by debtors. The value of debtors is 28,000. We should write in the inner column. By bills receivable value is 14,000. Next after that by goodwill rupees 12,000. By stock 1,10,000. So out of that how many assets are there? 1, 2, 3, 4, 5, 6 assets we have. Out of 6 we are selling only 4 assets. Remaining 2 assets we are not selling. That will take over by partners. It will comes later steps. So here we have to make the total of this. So while making the total list we have to get 1,64,000. 1,64,000. So you have to draw the transformer for this. This value is very important to us because this value is going to transfer to the bank account. Step number 3. Step number 4, what it will say is payment of liabilities. Where it becomes step number 4, always come to the debit side of realization account. We will write to bank account, cash or bank account. We will write directly to bank account. In bracket, we have to mention liabilities paid. Liabilities paid. How many liabilities we have? 2 liabilities are there. So what the information is given? Liabilities or creditors and bills payable are paid in So we have to write full value. So we will write to creditors. Without a discount, the value is 20,000. Bills payable value is 4,000. By making the total of this 24,000. 24,000 is the payment of liabilities we have to write. This is step number 4. Let's come to the step number 5. What it will say step number 5? Any asset taken over, you have to record it the realization account. Assets means taken over. Assets always come to the credit side. Liabilities taken over means come to the debit side only. So step number 5 will say that by partners capital account. By partners capital account. In bracket we have to mention assets taken over. Assets taken over. First we have to write by Surya capital account. In bracket mention that what he is going to take on machinery. Machinery taken over. Value is 30,000. We will write directly out the column. By Chandra capital account. What is taken over? Furniture. Taken over. What is the value? So there Chandra is taken over 24,000. Step number 5. Step number 6. What it will say is payment liabilities taken over. The company will have only 2 liabilities that we are going to pay. Now no one has taken over that one. Ignore the step number 7. Step number 8. What it will say? Dissolution expenses. So here dissolution expenses sometimes paid by partner, sometimes paid by the company. Now here they mention that dissolution expenses amounted. That means all the partners gathered and they have to pay this. That is paid by the company. So it will come to the realization account. Debit side only. We will write to bank account. So dissolution expenses. The value they are given rupees 5,000. Rupees 5,000 they are given. Now all the adjustment we have to transfer, all the expenses we have to pay, and all the incomes what the company will have when they are going to close, that also we have to record it. It's finally we have to close the realization. So how to close? By making the total of both balances, debit balance as well as the credit balance. Then we have to deduct the lesser value, then higher from the highest value, we will get the difference. So apart from that, this question we will get profit only. So the difference we have to get on our left hand side only, that is debit side. What is the total of credit side now? That is 2,42,000. 2,42,000 is the total of credit side. Same value we write in the debit side also 2,42,000. Out of 2,42,000, deduct all the payments or expenses, we will get the difference. The difference is 10,000 rupees. For this, we will give a name to partners capital account. In bracket you have to mention that profit. So here Surya, first partner who is Surya, Chandra and Akash. So 10,000 into 3 by 5. 10,000 into 2 by 5, sorry 1 by 5, again 10,000 into 1 by 5. 25. Therefore, each partner will get different value. First partner will get 60,000 rupees. Second partner will get 20,000 rupees. And also third partner will get 20,000 rupees. Based on the ratios, we have to distribute the profit. So, what finally by the realization account we have to prepare this to know about the profit or loss on realization of assets or the payment of liabilities. What we have to get for that identification, we have to prepare realization account. This is first account. So that in this for this we will get the profit. That profit we have to distribute it in the ratio. Therefore, we have to get the exact values of profit here. We have completed the first account. Next, we have to move to the second account, that is partners capital account. The second account is partners capital account. Debit side, we will write particulars first partner Surya, Chandra, Akash. Again, credit side particulars Surya, Chandra, Akash. Particulars Surya, Chandra, Akash, and particulars Surya, Chandra, Akash. So these are the columns for partners capital account. So for this account, first we have to transfer opening balances. So here opening balance, where it is available? Opening balance always available in the previous balance sheet. So we will write by balance brought down. First partner 80,000, second partner 60,000, third partner 40,000 rupees as the capitals. 60,000, 40,000, 80,000, 60,000 and 40,000. After transferring the opening balances, any other information which is related to partners capital account, whether they are given in the previous balance sheet, just we have to check it. So under liability side, whether they are given reserve fund, no. So therefore we won't consider. Whether they are given any general reserve, then also we won't consider. That is also not given. Next, come to the asset side. Whether they have been given profit and loss account, asset side also not given. When come to the liability side, whether they are given profit and loss account in the balance sheet, no, they are not given. So totally undistributed profits and losses will not be given. So that time we won't consider. Let's come to this account. So in this account, somewhere we have to record it the term partners capital account. So here, when come to the credit side, we have to record it by partners capital account. By partners capital account. Why we should write this one? Because assets taken over. Who is taken over the assets? Surya, Chandra. For their account we have to debit these values. because whenever we want to make a settlement, we have to deduct the value of assets and the balance we have to pay to the particular partner. So we have to write here to realization account. In bracket we have to mention that assets taken over. Who is taken over? Surya capital account. What he is brought? Machinery. So in the name of Surya we have to transfer the value, that is 30,000. Chandra capital account. What is taken over? Furniture. So in the name of Chandra we will transfer 24,000. And the Akash will not take any asset, no need to transfer here. Okay. Next, again go through this account only. Here again somewhere we have to write the partner's capital account. So here, which side? Debit side. What is that? Profit. Profit always comes to the credit side of the next account by realization account. In bracket mention that profit. Already the profit we have to distribute it here. So first partner will get 6,000, second partner will get 2,000, the third partner will get rupees 2,000. Finally, we have to close the accounts. Apart from that, no other information is there. So just we have to close the account. So 86,000, 62,000, 42,000. Same balance we transferred here. First partner 86,000, 62,000, 42,000. So out of this we will deduct the values. So 86,000 we will deduct 3,000 means we will get 56,000. After that 62,000 minus 24 we will get 38,000. And the third partner will get exactly 42,000. So for this we will give a name to bank account. Bracket we have to mention capitals. Like this we have to draw the columns for realization. Okay, this is about partners capital account. The second account also we will complete it. Let's come to the third account, that is bank account. Let's we have to draw the columns for bank account. So for this also we have to fulfill the conditions. Debit side, particulars, amount. Again credit side, particulars, amount. Particulars amount. So here also credit side and debit side, both assets, few transactions we have to get. Bank is an asset. Asset always available in the previous balance sheet. Which side? Right hand side. So here from there the value will be transferred. This will come to the debit side of the next account, that is left hand side we have to write. We have to transfer opening balance to balance brought down. Balance brought down. So the opening balance is 1,000 rupees is the opening balance of bank which is available in our question balance sheet. After that, both the two accounts we have to get some values. That values we transferred here. Before transferring the values, so just once again we have to see the balance sheet. In the previous balance sheet, whether they have given any partners loan, which is given in the last question. No, here no partners loan is not there, so no need to write that one. If it is there, means that also transfer. Later we have to transfer from first account and second account, and finally we have to conclude the solution. So here loan is not available. Let's come to the realization account. In this account, somewhere we have to write cash or bank account. In the step number 1, we won't write the cash or bank. Step number 2, we won't write the cash or bank. Step number 3, under this step we have to write the term bank, cash or bank account. But here only they are given bank, so we will write just bank only. What is that? Assets realized. So here, where it is available, it is in realization account. Which side it is? Credit side. In the next account, which side it will come? Debit side of the next account. We have to transfer. You will write the heading 2. From where we have to get this value? To realization account. Realization account. In bracket, we have to mention assets realized. So the value is 1,64,000, which is already we have calculated under step number 3. We have got same. Step number 3 is completed. Let's come to step number 4. What we have to do? Again to bank account. What is this? Liability side. Which side we have recorded? Debit side. In the next account, which side it will come? Credit side. From where we have to get this value? By realization account. Realization account. So what is this value? Liabilities paid. Rupees 24,000. After that, again we have to go through the same realization amount. Again we have to go somewhere. Bank account. Step number 4 is completed. Step number 5. What we have to do? Partners capital account. Here no bank is there. Step number 6 is not there in our question. Step number 7, again we have to write 2 bank account. What is that? Dissolution expenses. Which side it is? Debit side of realization account. It is come to the credit side of realization account. Again we have to go by realization account. This value will be carried forward from realization account. What is that value? We have to draw right in the bracket dissolution expenses. The value is 5,000. The value is 5,000. So first account we have to complete the process. Let's come to the second account. Which is that account? Partners capital account. In the partners capital account, somewhere we have to write bank account. Which side we have to write? So credit side, there is no word. We have to use the word bank account. When it comes to the debit side, we have to write the word to bank account. The value which side which is available, debit side of partners capital account is there. It will transfer to the credit side of the next cash or bank account. So we will write by partners capital account. Partners capital account. So partners capital account. For whose capital accounts we will get the difference? So first partner Surya, we will get the difference of 56,000 rupees. Second partner Chandra, we have to pay this one also, 38,000 we have to pay to Chandra. And finally Akash, so we have to pay 42,000 for Akash. Apart from this, no other payments, no other liabilities that we have to liable to pay. There is no bank loan, there is no other expenses and all the payments we have to make. So now it's time to close the balance of bank account. So finally, what is the total of bank here? 1,64,000 plus 1,65,000 is the asset which we have. The same value of the liabilities also we have one taking. The total is 1,65,000. Like this, we have to close the bank account also. This is the exact procedure while we have to preparing the accounts for dissolution of partnership firm. That is realization account, partners capital account and bank account. So this is the solution. Everyone must not should see this one. Later on we have to move to the remaining concept with new adjustment. Just listen, understand, read. If you are not getting this any doubts means, if you're getting any doubts means, you can directly contact me. I will explain entire your doubts with my personal number itself.